Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today is the 5th of February 2020, so yep, welcome everyone. Welcome to this this Wednesday's afternoon session. There we go, we got a mind block. So Wednesday's afternoon session, where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also, just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. I believe you can find a lot of useful stuff here for yourselves, so feel free to visit us on jfdbank.com and click on the research page right there. Right, now then, let's jump into the charts. Now the first one I want to touch on here is the Nasdaq 100. So yesterday the Nasdaq managed to create a new all-time high for itself, and looking at the cash index right now, we can see that the index is already once again at a new all-time high, and it's not only that, it's already above the 9,400 barrier. So it's currently running around the 9,445 mark, so we'll have a nice opening gap here to the upside. Now this is what I talked about previously when I was covering Nasdaq. Basically what I was saying, that if we get a push back above the 9,080 zone, then yes, there is a possibility we could see this one drifting maybe to the upside again. So yesterday we had a decent rally here, which, as I mentioned, created a new all-time high, breaking the 9,272 mark. So, and as I said, it is currently trading, the cash index is currently trading around the 9,445 mark. So we'll keep an eye on this one. So basically that's all the way up until here. So in a way, be very careful with that, guys. Certainly it is very difficult right now to talk about the downside with these strong uprises. But in a way, don't get me wrong, we may get a bit of correction at some point, but for now it's just one-way traffic, and that's why be very careful with this one. And in a way, what we could do here right now is just to be probably on the safe side. Actually, let me just get rid of some of these lines. These are no longer valid, because what we're going to focus on now are some other lines, and let me just quickly put those on the chart. So the one of which we will be looking here for, it will be the 9,170 zone, which is the high of the 31st of January. But of course, before we could consider this area, we would need to see a move back below the 9,272 zone. But given the fact that we are now above the 9,445 mark, well, I mean, what we're going to do here is we will also keep an eye on this high, the yesterday's high, which is around the 9,353 mark. So in a way, if we get a drop back below this, yes, we will aim for the downside. We'll be very careful around here near the this previous all-time high, near the 9,272 mark, which was basically the highest point of January. But if that fails to withhold, now this is where it could become even more interesting for the sellers, and we could see this one drifting back down towards this medium-term upside support line taken from the low of the 3rd of October. But again, this is the downside scenario here, guys. So that's why for now, of course, the downside is slightly off the table. We'll see how it performs right now near the 9,450 territory, because that's where the cash index is heading to right now, and maybe even we could see a test of the 9,500. So the psychological 9,500 level could be a nice opportunity for the bulls to test. But again, let's not get ahead of ourselves too much. First, let's see how the market is going to open, and then we'll take it from there. Silver. Now, I've talked about silver last week, and basically what I was telling you guys to keep a close eye on this downside line. So overall, of course, we are still trading above this medium-term upside support line taken from the low of the 28th of May last year. But at the same time, from the shorter-term perspective, we are balancing still below this downside line taken from the high of January. So you can. This is what I was talking about previously. So in a way, if this downside line continues to hold, then yep, we could see a nice drop lower, which is now working out perfectly. Now, still the main target for us here is this this medium-term upside line. We'll keep an eye on that one because this could be a nice area for the bulls to step in again, and if it holds, we could see a nice rebound and a push back to the upside. Of course, if the drift lower will not happen, then keep your eyes still on this downside line, and for us to get comfortable with the upside, we would need to see not only a break of this downside line, but also a push above the high of the 31st of January. And let me just quickly adjust this. Sorry, not the high of the 31st of January, but the high of the 2nd of February. That's roughly around the 18.12 territory. So again, a nice push above this could kind of would confirm a forthcoming higher high, and we could start aiming for these other higher levels, like for example here in the 18.35, or even going further north. But again, for now, the upside is slightly off the table. How you could play this one out is just keep an eye on the recent low and today's low, which was around the 17.46 mark. If we get a nice drop below this, yes, we will continue targeting the 17.36 area, or like I said, this medium-term upside support line. So yep, for now, guys, keep your eyes on this one. This, once again, I'll remind you, this medium-term upside line is running from the low of the 28th of May 2019. So keep your eyes on that one. Brent oil. So I talked about Brent oil this morning in my Traders Espresso, and basically I was telling you guys to keep a close eye on a potential correction here, so which we are getting right now. So of course, understandable that the kind of the strong slide that the steep slide that we experienced lately here, I mean, at some point we should be seeing some sort of a larger correction. For now, anything up until this downside line taken from the high of the 7th of January will be considered as a temporary correction before another leg of selling. So that's why probably the bulls should not get their hopes up yet, unless we see a nice push back above the 57.36 mark, which is the low of the 8th of October of last year. And if we do get a nice push above this, there could be a bit of hope to see this instrument, this commodity, climbing back up here, maybe towards the 200 EMA here on the 4-hour chart. But again, until we see that break, we cannot really talk about the upside unless it's part of a larger correction. So keep your eyes on that one. Overall, we're still bearish. For those who are more on the cautious side, in a way, if you don't want to let's say risk it here near this downside line, then you can just keep an eye on the 53.68 zone, which is the low of yesterday. A nice good drop below this would confirm a forthcoming lower low, and yep, we could aim for the 52 mark here, roughly around here, or even going further down. So for now, like I said, keep your eyes on this one. AUDJPY. So of course, with our risk pair, the Aussie dollar against the Japanese yen, so of course it's pushing nicely to the upside as the equity markets continue to explode to the upside, basically now looking at this picture here, you can see that it is opening the path for itself towards higher levels, and in a way, given the steep uprise, don't get me wrong, we may see a bit of correction here, but the question here is, will this come will the correction come first before reaching the 200 EMA, or will we actually see a test of the 200 EMA first, and then we could see a nice kind of rejection around here, and then a drift lower? So for now, long story short, basically how you could look at this from the upside perspective is, of course, for now, keep your eyes on the price action. Probably wait either for a push towards this 200 EMA, or if, let's say, it decides not to travel towards this 200 EMA, but decides to test this area first around the 74 mark. If the 74 area holds and acts as a nice area of support, then we could see a nice rebound and a push towards this 200 EMA or even further north. In terms of the downside on this one, we'll take a bit of a conservative approach here and wait for a drop below the 73.44 mark first before considering any downside here. So again, but the downside is slightly off the table, guys, so keep your eyes on that one. Now then, jumping into AUDCHF, also it's a similar story here. I talked about this one this morning, and basically what I was saying, that if this downside line holds, then we could see a nice round of selling again. But if it fails, well, all eyes are on the 0.6603 area. Well, in a way, we could round it up towards the 0.66 territory. All eyes are on that one, because if it gets a nice break above this, then, well, I mean, this could open the path towards higher levels, yep, we could consider the 200 EMA as the next potential target, or even going further towards the 0.6676 mark, and then, yep, we'll take it from there. Because don't get me wrong, overall we are still trading below this this medium-term downside resistance line taken from the high of the 7th of November. So in a way, it could be a nice good touch here, but we don't want to miss out on all this territory. So that's why we're going to try to consider the upside after we get a nice push, or ideally if we get a nice close, at least of a 4-hour candle above the 0.6603 mark, and then, yes, like I said, we will aim for higher levels. So keep your eyes on this one. In case this suddenly drops back below this downside line, well, this is where the bears could come in again and drive this one lower, especially if the rate starts falling below this little territory right here near the 0.6516 zone. So keep your eyes on that one. GBPCAD now, also this is quite interesting here. So basically, initially this morning we were having a nice push higher. We did get nice good figures from UK today in terms of composite PMI and services PMI, the final figures, of course. So they've came out better than expected. So initially we had a nice push here on the GBPCAD, but to be honest, that was already expected. So we had this move earlier, and then it started selling off quickly after. Well, I mean, recently it started selling off. I mean, the Canadian trade balance came out, and that was in the better territory than it was expected. So we saw a bit of Canadian dollar strengthening here, and this is what I was talking about yesterday from the technical side. So yesterday in my tea time video, I was telling you guys to keep a close eye on this upside support line taken from the low of the 20th of January. Now, of course, if we get a break below that, then in a way it could open the path towards these lower areas, but ideally we would prefer to see a drop below the 1.7231 zone before considering any further moves lower. Again, all eyes are on this upside line and on this area of support near the 1.7231. If it gets broken, then yep, we could see a deeper move to the downside. Initially we'll target the 1.71 zone, but if that fails to withhold, then yes, it could be opening the path towards the low of the 20th of January, and that's around the 1.6939 zone. So we'll keep an eye on that one. In terms of the upside, as I've mentioned yesterday as well, we are keeping an eye on this level here. I do understand it's kind of quite a big move here to miss out. In a way, you could start considering the upside if we get a push above the high of today near the 1.7356 mark, but to be to get a little bit more comfortable for further moves here, then a push above the 1.7481 zone would be needed. So again, guys, for now we are of course examining the downside here, but we need some confirmation breaks first before we could consider any deeper moves to the downside. USDJPY, now very quickly on that, so also something that I've mentioned this morning. And just look at the fantastic test of this area here, not far from the 23.6% of on the Fibonacci retracement. So we got a nice test of this area, from which you can see the pair rebounded and pushed to the upside. Now, this is the scenario that I was talking about this morning, and we managed to reach our target near the 109.65 zone. But as you can see, it overshot it even and continued to kind of push higher. Now let me just get rid of this and get rid of it, and it managed to reach the area near the 109.81 zone. So we'll keep an eye on this one. In a way, we do have the R1, today's R1, which is roughly around the 109.85-86 territory, so it could be a nice area for resistance for today. In case this already kind of feels quite overstretched to the upside. And of course, looking at this 4-hour chart, you can see how steep this uprise is, and of course at some point we should be getting a bit of correction. It cannot continue like that. Like, I mean, we don't have really that radical kind of conditions right now in the economy that it could just continue going straight in a straight line. But again, for now, yes, there could be a bit more upside here. Maybe we could see a test of the R1, which is around the 109.85-86. Maybe get a hold up around here, and then maybe correction to the downside. And this is where it could become interesting, because if it holds above the 109.65 zone, now we could see something like this again, a nice good curve and a push back to the upside towards the high of January near the 110.29 zone. So of course, the big barrier to overcome here will be the psychological 110 zone, but to be honest, the slightly better one that we've got here is the highest point of January near the 110.29 level. So we'll keep an eye on that one. In case this suddenly starts dropping lower, for us to maybe examine the downside again, well, ideally we would like to see a drop below the 109.26-27 zone, because this way the rate would be placed below the 200 EMA on the 4-hour chart, and yep, more sellers could be joining in and potentially driving this one lower. But until then, any kind of move lower could be seen as a temporary correction before another leg of buying. So keep your eyes on that one. And Euro USD, of course. So this is what I was talking about this morning. So basically, we got our drop below the 1.1015, and then the next level for us that I was saying that we will consider will be the 1.10, the psychological 1.10. So we can see that currently the pair is getting a hold up near that area. The big question: can it drift a little bit lower? Can it test the lowest point of November of last year near the 1.0980? Now, of course, if we get a drop below the 1.10, yes, we will start targeting the downside. Initially, we will keep a close eye on the this level right here. Let me just recycle one of these lines. We'll keep an eye on the 1.099091 zone. That's the low of the that's low the 29th of January. But if that fails to withhold, of course, yep, this could open the path towards that lowest point of November near the 1.0980. So something to keep an eye on. For now, we're more bearish than bullish on this one. We'll keep an eye on the psychological 110. If that gets a break, as you can see now currently it's acting as a fantastic area of support. But if it gets a nice break and we see a nice 4-hour candle close below this, then yep, we will aim for that 1.0980 territory, and then after that we'll take it from there. So guys, I hope you found it useful, and thank you very much for sticking around and watching it till the end. If you want to join me, later on, well, not later on, but tomorrow morning at my Traders Espresso, as always, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you tomorrow at my Traders Espresso, 7 o'clock GMT. Thank you very much, and bye-bye.